Good morning, trade pros. Welcome to Morning Market Update for Friday. Whoa, the camera's close. Friday, January 25th of 2019. It's George Pavlov, Trade Pro Academy. We have Victorio here as well. You guys probably seen him and hear from him on the videos. We're in today, and we're going to give you a good morning market update. We're going to talk about a few things. Most importantly, the Federal Reserve and a shift in some of their recent language. And then last but not least, we're going to talk about the wall, the border wall that Donald Trump wants to build. And how it could actually happen pretty soon. It could start being built. All right, let's start with a morning market fun fact. There's a new course coming out that's proprietary trader level training, and it's coming out of Trade Pro Academy. And it's good. It's a fun fact because it's an opportunity for you to learn this stuff in real time. We're recording it starting February 4th, every Monday and Thursday at 8 p.m. Eastern. And this is your chance to catch the training live. It'll be an elite member event, so everyone with the elite member subscription at the time will have the opportunity to take part of the taping and the recording, and it's an interactive experience. You're going to have an opportunity to ask questions and get those answers in real time, all right, for the price of the subscription. And the best part is there's a 14-day money-back guarantee, so if you really dislike it, there's no risk to you. And I don't think you're ever going to be in a no-risk situation ever again in the trading markets, right? It's not $10,000. It's not $20,000. The real teacher is the market, and this information will help guide you to your way to profitability, all right? That's the exciting part. That's the morning market fun fact. If you want more info, link is in the description. It's coming up. It's not next Monday, but the Monday after, all right? Just a little over a week, and we're going to start this training. It's fantastic. I'm working on it right now. I'm not going to pretend it's done, but the work that I put in so far and what we have is going to be an amazing level education. I mean, the best course ever. We're retaping our 2016 course, and this one was branded as a retaping, but it's a complete redo. It's going to be a brand new course, a lot more powerful and adjusted to the market conditions, because sometimes you'll learn how to trade from stuff that was put together in the 90s. And it's fantastic. It might be great education, and it worked in the 90s, but the market's changed several times over since then. So you have to really make sure that you're trading with the tools that are current and give you a chance to succeed in today's market conditions. All right, that's the new trading course, futures day trading course coming out and starting on February 4th. If you want to take part, click the link in the description. All right, yesterday's key earnings, Intel down 5.3% after hours, and this morning on downside fiscal year revenue guidance. They missed. And not only that, they reduced their future outlook, which is really where the bearishness is going to come into Intel. I think there's going to probably be a little opening rally to fade the gap, and then downside will continue on Intel. Starbucks is up 3.3% after a surprising beat in their profit. And I can tell you this, it's probably because I found the password to my Starbucks app. And since then, I've been spending a lot of money at Starbucks. So Starbucks, you're welcome. Starbucks shareholders, you're welcome as well. It's probably not just me. Western Digital up 6% on higher Q3 guidance. So we have some decent earnings other than Intel, which miss. All right, let's take a quick gander around the markets globally. Japan's up 1%. Hong Kong's up 1.65%. China's up 0.4%. India's down 0.6%. Strong gains across the board in Asian markets. I think we're going to close out the week on a bullish note, and Asian markets rallied in anticipation of some trade deals coming up. We have until the end of next month, until the end of February, which was the agreed upon date between President Xi and Donald Trump as of December 1st. All right, and that happened at the last, was it in Davos? Yeah, it was in Davos, the last meeting in Davos where they discussed and said, hey, we're going to give each other 90 days. Let's get this worked out. All right, in Europe at midday, London's up 0.4%. Paris is up almost 1 percentage point. Frankfurt's up 1.36%. European markets strong overnight. Futures in the United States, Dow's up 0.7%. S&P's up 0.7%, and climbing. And Nasdaq's up a whole percentage point. So we're seeing some strong gains here in the early morning of the last trading session of this week. All right, crude oil's up 0.25%. Currently trading 53.15, pairing some of its early morning gains, but still on quite a rally. Yesterday, we had the oil inventory report that we traded as a group. It was a very interesting report in that it came out very bearish. We had some downside, and then oil got volatile, but found its way higher. There was a really big magnet at 53.33 that we were looking to explore. That was an inventory magnet, and in our room, we were targeting that level, And as soon as we ended the room, it started to climb up to that level. But we had some great trades in between. Yesterday, the team was 73% positive. 73% of our traders that traded live identified as being positive, and that was impressive because it was a day that was very slow in the S&P and then opened up a little bit later. But oil prices had a huge opportunity for a trader. So awesome stuff was happening in the room. I love our team. Honestly, we do special things every day. All right, gold is up slightly as well, which is interesting as markets are ripping. Gold should see some lower prices, but it has not. So this is a little bit of a inverse correlation divergence. All right, 10-year Treasury yield is up 1.25 basis points. On today's calendar at 10 a.m., we have new home sales at the top of the hour. And then this afternoon at 1 p.m., because it's Friday, we have the Baker Hughes rig count, which measures production in the United States, offshore drilling and how many rigs are operational. All right. So here's the latest update from the White House. The White House is asking for a large down payment. 6 senators on the floor yesterday wanted to advance a bill, and that would look for a down payment for the border wall, for Donald Trump's idea of the border wall, and then that would reopen the government for a few weeks while they negotiate the final budget that would allow them to continue their operations. Right now, the government is still closed. We're on the 38th day or something like that, and we've almost doubled the prior record under Bill Clinton. So this is becoming a problem because these furloughed workers and these federal workers, there's almost 1 million of them, aren't getting paid, and they've missed 2 paychecks now. And we talk about trading. This is a little bit of an aside note. We talk about trading, saying that it's risky and it's perceived as a risky business, but it's something that you have the power to create results over. You're in charge. And I think the biggest risk is being in a position where you're not paid for 2 weeks. All right, because those people put their heart and everything into the grind to help, and now they're finding a situation where they have to work for no pay. Right? I can't think of a bigger risk than that, and it's unfortunate. So here's the thing. Donald Trump is getting prepared to actually declare a national emergency. So he realizes that Democrats are not going to bend to his wishes to get funding for a border wall. So he's going to have to take other steps to accomplish his biggest promise in his campaign. And this is what he's going to do. He said that he's going to declare a national emergency, and some officials have provided information that it's already in the works. And they've listed some numbers here on what they're going to take from in order to pay for the border wall. And if they have these numbers, it means they've at least considered it to the point that they've got all the numbers secured, and all it takes is just declaring the emergency to get that funding. All right, they're looking for $7 billion in potential funds for the border wall overall. They're targeting $681 million from the Treasury forfeiture funds, $3.6 billion from military construction. So they're going to take that amount and allot it to the wall, which now makes sense in one way why Donald Trump was pushing for an increase in the military budget. This could have been a plan all along if he felt that he couldn't get a deal through politics. Because let's be honest, that's what politics are: negotiating, giving something, getting something, and ultimately getting your way, but making people feel like it was their idea. That's the definition of politics. All right, it's influence. So $3.6 billion military construction, $3 billion in Pentagon civil works funds, and $200 million in Department of Homeland Security funds. They've identified that as where they want to use these areas from which they're going to pull funds to start the construction of the wall and have the money allocated. All right, last but not least for today's morning market update. This is very, very important. And I think this is part of the reason, not all, there's never one reason anything happens. This is part of the reason that we're seeing such a bid in equity markets. And I think that this bid will continue. Here's the thing. I was looking for a reversal on this rally to head to the downside. And I think we're going to start heading towards the highs once again. Right? We're going to break the overhead resistance, and we're going to find our way higher. I'm not saying new all-time highs, but at least another 50, 60 points higher from here. I'll tell you why, because this is very, very important. Pay attention here. Stop looking at your phone. Just kidding. Maybe you are, maybe you aren't. Or maybe you're watching this on your phone, in which case don't stop. Keep looking at your phone. All right, so the Federal Reserve, there's talks that the Fed wants to end their bond selling program. All right, what that means is they're unwinding their balance sheet. These are assets they accumulated during the financial crisis that they're now offloading. They got to get out of these positions. It was a temporary emergency action, and they got themselves stuck in that position. They haven't been able to offload the funds. They started to do it, and in February, the schedule of selling was going to get a lot more intensive. So not many people know this, but they've started rolling off their balance sheet assets and allowing these bonds to expire. And they're even selling some bonds now. And that's two different things. The first one, having a book of bonds that expires and you put the cash back and you say, hey, look, this bond is done. That's a less aggressive form of unwinding a balance sheet. Now, taking a bond on your book that hasn't yet expired and selling it in the open market is a lot more aggressive of an operation. And they're just about to get started on a higher degree to the tune of $40 billion a month. All right. And so here's the interesting part. They're already deciding whether or not to pause that operation. The Federal Reserve said that they would, hang on. They began this program in October 2017, but it's intensifying now. They're deciding on whether or not whether or not to stop, but how to communicate this to the market. And I thought this was very interesting. This is a report. It's not confirmed yet, but them talking about, hey, how do we communicate to this market doesn't mean that they're deciding on whether or not to do it. They've already decided to pause their operation to sell bonds. And now they're saying, how do we communicate this to the market? Considering we're so gung-ho in the last couple meetings, we've continued to say we're going to continue to do this, unwind. The bond portfolio is going to get offloaded. We're going to stay on course for that. And just a few weeks later, how do they communicate that to the market? They'll say, oops, no, we're not. That's the big question. Next week, we have a huge FOMC policy meeting. That's going to be front row and center. Forget about interest rates. Forget about all that other stuff. This is what the market wants to know about. This is very important. If they decide to stop selling bonds, that puts less sell pressure in the market, all right? And it leaves the extra liquidity floating in the marketplace. Because what does it mean for a Federal Reserve to sell bonds to the market? I'm the Fed, you're the market. Let's use this example. I'm selling my bonds, let's say $40 billion to you. What are you doing to reciprocate? You're giving me $40 billion. So I'm draining liquidity. I'm taking it away from the market. And that's why this unwinding program has been reducing liquidity. And reduced liquidity puts fear in markets because a lot of banks will lend less because they expect to have less money. The supply of money is dwindling in that case. And that really puts the pressure on lending and a whole bunch of stuff, profits, the whole finance industry. All right. So the news here is if they communicate this to the market, more liquidity is going to stay in the market. And that's a positive thing. Equities are going to rocket on this news if it's confirmed. I'll tell you this, it's going to be great for the stock market temporarily, but it's actually another bad sign for the economy. If the Federal Reserve is not confident that they could reduce liquidity, that means that they're not confident in the economy in the future. So that's an economic red sign, red flag, but the markets are going to love it nonetheless. The economy is not the market. You need to understand that. I hope it's been helpful. I'm going to wrap it up there. And we're back to business today. Yesterday, we had a day off. Well, we traded, but we didn't do a YouTube video because I came in super late. I didn't have time. let's be transparent here. I slept in. My alarm clock didn't go off. Didn't go off because I silenced it the night before, but not intentionally, accidentally, because I have multiple alarms. Make a long story short, we're back today. We'll see you guys on Monday again at 9 a.m. We got 2 awesome videos coming out this weekend, and I strongly encourage you to check out the futures course. Info is below in the description. You can learn more about it. See a little video I've prepared for you on what you're going to learn. All right, guys, see you on Monday. Have a great weekend to you and your family and loved ones. I appreciate you all. Thank you for being part of our community. And I love coming out here every morning and sharing an update with you. It's a big part of my day. I really look forward to it, and I get excited. And I hope you love it too. If you love it, coincidentally, YouTube's made a little thumbs up for that. So please punch a thumbs up. Tell us you like the video. Tell YouTube you like the video so we can grow our community. The more people that trade together, the more powerful the team becomes. You have yourself a fantastic day and a great weekend. We'll see you on Monday. Take care. Goodbye. Trade pros in the room. You could tell I've had coffee. Good coffee. We're going to have a good day. We're going to wind down this week on a nice green day. Let me talk about S&P 500. I'll give you some levels and areas of interest where we could qualify or look to qualify a good high probability, low risk trade. Then I'll put Victorio to talk to you about NASDAQ. And we'll bring our oil desk resident expert, Steven, to talk to you about some oil levels. All right, we have multiple opportunities today in the markets to get green. Let's close out the week on a nice positive note. All right, let me get started with S&P 500.